Hello and welcome to my April roundup regarding what's been happening worldwide and my investment portfolio updates. So if you want to see that now, skip ahead in the video. This April was marked by heightened volatility across global financial markets, primarily driven by escalating trade tensions initiated by the United States. President Donald Trump's announcement of sweeping tariffs led by significant market fluctuations impacting investor sentiment worldwide. On April 2nd, President Trump declared a Liberation Day, announcing a 10% tariff on all imports, with higher rates for specific countries, including a 54% tariff on Chinese goods. This move triggered a global market downturn, with the S&P 500 and Dow Jones Industrial Average experiencing the most significant declines since the 2020 pandemic-induced crash. In response to the market turmoil, the administration paused the implementation of tariffs for 90 days in most countries, excluding China, where tariffs increased to 125%. This announcement led to a temporary market rebound, with the S&P 500 surging 9.5% and the Nasdaq rising 12.2%. The tariff announcement had far-reaching effects beyond the United States. Emerging markets, particularly in Asia and Latin America, experienced increased volatility. The MSCI Emerging Markets Index showed resilience, with countries like Brazil and Chile posting gains due to strong commodity exports. Consumer confidence declined sharply in Europe, with the UK experiencing its worst confidence levels since 2023. The GfK NIM barometer reported a 4-point drop to negative 23%, influenced by concerns over inflation and economic slowdown resulting from the tariffs. Given the current market conditions, it's crucial to maintain a diversified investment portfolio. Investors should consider exposure to sectors and regions less affected by trade tensions, such as domestic-focused companies and emerging markets with strong fundamentals. Regular portfolio reviews and focusing on long-term investment goals can help navigate the ongoing volatility. This summary provides an overview of the events impacting global markets in April 2025. Staying informed and adaptable is key to managing investment portfolios during such turbulent times. Next, we move on to my investment portfolio. We will examine my interactive broker investment account, as well as my KiwiSaver retirement plan account and EquatePlus. Firstly, let's look at my interactive brokers account. Using Snowball Analytics, as it is my favorite investment portfolio tracker, and I highly recommend it to anyone to gain better insight into their investments. Currently, the portfolio has a value of $12,957.22, and so far a total profit of negative $353.57, down 2.7%. I am not too worried or anxious about this, as I only recently moved platforms from Sharesies to interactive brokers, and the stock market's recent movements are affecting my actual total profits, as recent down markets have skewed this. Next, let's look at the distributions of my investments. The majority are in funds. Clicking on it shows my most significant holdings: SCHD, MSTY, SPY, QQQ, and VOO, a mix of dividend funds for income and index funds for diversification and growth. Overall, my funds have dropped by 1.71%. Next, let's look at the financial holdings, with two holdings here being S&P Global and MasterCard. It has dropped by 4.02%, but these two companies are some of the most sustainable growers in their respective industries and hold large chunks of their markets. I am not too worried about their performances and look forward to their upcoming growth and performances. Thirdly, we have information technology segment, with the two being ASML and Microsoft. As you may have seen in my last video about the best 5 stocks to purchase, ASML was one of the companies flying under the radar and is a good buy for long-term growth, as well as growing dividends. My information technology segment has fallen in total by 4.51%. In my communication services, there is only one holding, which is Google. It has dropped 5.45% in value, but it is the one that I want to add to my position as well. They recently released their 2025 quarter one annual report, and almost all of their metrics exceeded expectations. With multiple sources of income generation and diversified products, Google will have a strong rest of 2025 and beyond. Next is my only segment which has performed positively this month, an increase in value: consumer staples, and my only holding being Costco. With their unique business model and growing earnings and expansions, they are, I believe, always a good buy, as well as their performances in worrying and uncertain markets. Lastly is consumer discretionary, with half in Amazon and half in Bookings Holding. Bookings Holding have performed well recently, but Amazon has performed very poorly. But like my other holdings, I believe in the companies and its future earnings and growth. Next, let's look at my dividends. So far in April, I have received $60.23 in dividends, as well as an upcoming payment of $1.36 from QQQ. Here are my projected earnings for the rest of 2025 and the average growth of my dividends, with ASML being by far the fastest growing among my holdings. Next, let's look at my portfolio performance and compare it to the market. As you can see here, on April 2nd, the infamous Liberation Day by Donald Trump caused the market crash. Since then, the portfolio and the market have been trending back up to its original values. Currently, my portfolio is beating the market by 2.6%. Down here, this is a visual representation of my holding size and its performances. Next, if we look at the dividend calendar, you can see my expected income for the coming months: 105.18, 104.11, 138.53, 205 with 2 payments from MSTY, 131.15, and 108.58. My goal of a portfolio is having a balance of $500,000. If I contribute $1,000 per month, I can achieve this goal in 17 years. But as a university student with a minimal budget, it is quite challenging to add to my portfolio. Still, it is something I can contribute more to over time and continue to see it grow. Simplicity New Zealand, which has my KiwiSavers, which I have in the growth fund. So in total, it is currently worth $2,442.69. This farmer's portfolio, it currently has $1,055.82, with a 1 year change of 128, 1 month of 27, and 1 day of $3.59. This means that my total portfolio is $1,055.82 plus $2,442.69 plus $12,957.22, a total of $16,455.73. March was $14,507.88, which means the increase in my portfolio this month has been $1,947.85. Thank you for watching my April roundup of the stock market as a whole and my investment portfolio performance. Also, if you have time, you can watch my other videos as well. And until next time, thank you, bye bye.